What's up, guys, and welcome to another weekly Forex forecast. And what a week we've had when the non-farm payrolls show that the job market shrinks, the unemployment rate rises, and the Federal Reserve is under heavier pressure than on the last quarter, maybe even more, to actually go and cut the rates. And the biggest question right now would be, will the Federal Reserve be able to cut more than once this year, or we will see few cuts coming? So what are the interesting opportunities we have for this week? The first instrument is, as always, gold. One of the most tradable assets, as we know, managed to break the range, this triangle that it was forming for such a long time, over 4 months of formation, managed to break that and completes the rally. As exciting as it is, and no doubt it is, gold forming all-time highs, what can be better than that? I believe we are about to form some sort of a trap here, and here is why. On the higher time frames, we see that we are in a clear, obvious overbought condition with RSI indicator flirting above the 80 level. This is a significant call, and almost every single time in the past it was there, the market managed to find a corrective structure on the following period. I believe that this one is not going to be different. On a weekly chart, as we break through the range, we are forming higher highs on the chart, but also very close to form lower highs on the moving average of the MACD, with RSI will very likely do the same. And that means bearish divergence, that means pressure on the buyers, that also means that at the end of these 3 bullish waves, we are now forming a peak. Daily chart RSI is getting closer and closer to the 80, which is another way to form overbought conditions. So what does all that mean? I believe that on the 4-hour chart we should, as we can see here, we are forming the waves, higher highs, higher lows. I believe that with the highs forming, we should be under a bearish pressure. Higher highs on the chart versus lower highs on the moving average of the MACD and the RSI, bearish divergence in other words. And I believe as exciting the rally is, the next rallies or the next peaks are very likely to be nothing more than a trap before the gold is pushing down. Next one is the S&P 500, which is for a long time now forming this very interesting range. It is rounding up, rounding top. It was gaining the momentum while continuously creating the higher highs, higher lows, but now we are in a rounding top, which is usually a sign that the buyers are losing their momentum. One of the two scenarios is expected. One scenario, pretty popular, I would say, pretty common, is a final rally before a bigger turnaround. Okay? These kind of rallies many times happen to clean stop losses of early sellers. As simple as that. And if that happens, I would be paying attention to some very important levels. Let's plot Fibonacci expansion on the on this current trending condition and take a look where it all stands. If we plot Fibonacci on these 3 waves, that's the key zone, critical zone. We see here that's somewhere in between the 6,700, slightly lower than that, up to 6,900. So if we are facing this final rally, that could be towards this zone. If we take the Fibonacci to the next peak, which is, of course, let me just redraw that for you here. If we take it to the next peak, then the levels are... I'm redoing this part. And if we plot the Fibonacci on these waves, then we can see that the next formation is pretty much similar. As you can see, 50% extension up to 61.8% extension. It is around the same zone that we discussed before, which again means if we complete the rally towards the zone, that's where we should be looking for the next sell off. But could that be just a formation of a wedge at the end of this rounding top? The answer is yes. And as we discussed on the previous weekly video, and you can watch all the videos, of course, on this very channel, then if we start to see break below the recent lows, that could be the green light for the sellers that they are looking for and start pushing the price to the downside, at least until the meeting of the Federal Reserve. Next one is the euro dollar. We were talking about this one last week, actually last few weeks, and once again watch all our videos on this channel. The idea here is long when this trend line is broken. For now, the euro dollar is very interesting as it managed to hold the rising supportive lines, both lines in that case, but on the other hand, it fails to break this falling resistance line. And alternatively, it just goes in the range on the last month, doing basically nothing, but ranging in between the 117.50 down to 116. So what next with the euro dollar? What is coming next? My view remains absolutely similar. If we manage to break this falling resistance line and finally hold above the 117.50-ish, then buy retraces as long as the recent low hold towards the 119, 120, maybe even beyond that will make absolute sense. If, and that's a very possible scenario, the euro dollar fails to break that down and holds this resistance, then I suggest watching this zigzag structure. 2 waves down, 2 waves up. If it managed to flip and break to the downside, that opens up the doors for a deeper correction. And in that case, I believe the euro dollar is going to take us back to 112, 111 area. Watch it out as we are heading towards the 17th of September, where the Federal Reserve is going to announce their rate decision and give some hints on the future rate decision. That's where I believe the next waves are going to develop. And as we are in September already, not too much left, so watch out for that. Final one for today is the pound dollar, which is similar to the euro dollar. If we go to the weekly chart, the formation here is pretty obvious. We are in a sequence of higher highs, higher lows. On the chart, there are no signs against, and MACD and RSI are forming higher highs as well. At the moment, there are no reversal signs, and that's the bottom line. With that logic in mind, it will make absolute sense for the pound dollar to go and clean the next important highs that we have there above 137.50 and then above 142 area. That makes absolute sense. And I believe this is very possible scenario similar to the euro dollar behavior. The pound dollar managed to break this ABCD, and so far it is successfully holding above that, while the last month it was forming the sort of a range in that case. So the coming period is very important and very likely decisive for this pair. 2 scenarios similar to the euro dollar. Scenario 1, the ideal scenario, is we manage to break that zone and this resistance area, as we can see, 1, 2, 3, 4 spots, 4 times it holds below this area. If it finally managed to break above that, buy retraces will make absolute sense towards the discussed zone. But that also could be a trap. And that means, similar to the euro dollar, if we get 2 waves down and 2 waves up with a blockage here, break down below that, and we are going down again, very likely to retest these lows, which is around 131.50, and maybe even beyond this area towards the 130, and then possibly 127. So these are the two scenarios I am going to follow on the pound dollar. And I believe that coming 2 weeks, that's where we will see the next waves forming, making the market will make the decision, and the next moves will happen. That's it for this video, and as always, I hope you find your value in these trading opportunities. Don't forget to hit the like button if you enjoy them, and if you are new to our channel here, don't forget to subscribe with the subscribe button below this video. Wishing you good trading, and I'll see you soon with more. Bye for now.